I want to welcome all of our guests from around the world. We're starting off, Saket, with this is a workshop about how do you reinvent yourself? How do you handle disruption? When do you know how to pivot as a company when your core product commoditizes and you move to an area where you're really differentiated? It's a chance to share this first with the JC2 portfolio of 20 companies. Then we're going to post it on a lot larger scale, and I know you'll be using it internally with your team. If you watch how fast this market is changing, Saket, I've never seen it change faster in my life, and I've been through the internet transitions, the movement to the clouds, etc. AI will, in my opinion, be the biggest disruption of all times, bigger than the internet and bigger than the cloud combined in terms of direction. But what I wanted to accomplish today was for you to share a little bit how you've made that transition, because while I love all my startups very much, you have pivoted remarkably quickly again and again. And many of the startups, I have to push a little bit to disrupt themselves. With you, I actually occasionally have to slow you down a little bit on how fast you move. So today, let's really talk about major disruptions you made. First, from a services company, literally to a product company. Secondly, from an Indian company to a US company. And now to an AI company with a speed that's almost unequaled in the industry. So I want to thank you for joining us today.
John, it's an honor to be here with you, and over the years, the amount of learnings that I have had from you, John, with you being almost like a co-pilot on thinking through the leadership strategies, at the same time the execution, it's truly an honor to be here talking to you about this.
Well, it's really been fun too. We hope you catch the enthusiasm, the change. It's been fun watching you develop, and candidly, I learn almost as much from you as you learn from me. I want to remind everybody on the broadcast what we focus on when I make investments. I try to get a business model that is in transition, enabled by new technology. I pick the CEO whose strategy and vision I believe in for that business model and technology change, who also wants to be coached. I then go straight to customers and say, what do you think of this company? Is it tactical, strategic to you? Is it sustainably, differentiation on it? Try to pick somebody who's right at the inflection point, 2 years out where you really break away. And I'm usually a little bit early on that, candidly. Often ends up being 3 or 4 years out, as it did with you as well. And then I pick a company that can be 1 or 2 in the industry whose values and cultures the CEO really drives home. My expectation of the CEOs are very simple. I never get hard work confused with results. I look at a CEO who she or he has a strategy and vision for where they're taking the company and how they're going to get there, and also wants to be coached within that. I look at, do you really have the ability to be number 1 or number 2 in your category? I look at your ability to build a great team who can implement that strategy and vision, and Saket, as you've done a very good job to evolve that team as we move forward. I look for somebody whose cultural values I really believe in and you drive through the organization, and somebody that is a great communicator. And it's very important because you are the brand of the company, and many people underestimate the importance of the communication skills with the CEO in terms of the direction. And then somebody who really has the passion and energy to reinvent themselves and become 1 or 2 in their industry. So it's a pleasure today. So for the audience, what does Safe Securities really do? And just your elevator pitch, if you got 2 minutes with an investor or a customer or people you're recruiting into Safe.
Certainly. So John, Safe Security is addressing the problem of managing end-to-end enterprise digital risk. If you think about a parallel like the finance model, you actually have ERPs which are used to go ahead and manage end-to-end financial planning and execution. Similarly for sales, you've got things like CRM, like Salesforce. But when it comes to cybersecurity, end-to-end cyber risk management in one singular platform, which is driven by real telemetry from your environment, which can enable decision making, is fundamentally broken. And most of the large cybersecurity companies are point solutions which are very, very siloed in looking at their own world in a very, very deep way. Mm-hmm. But what puts it all together for the CEO, for the board, for the CIO, for the regulators, for the cyber insurance carriers to be able to see and trust and say, this is a great company when it comes to managing their cyber risk, or this doesn't look like a great company. That fundamental problem of managing end-to-end digital risk of an organization is the problem we are trying to solve. We call it cyber risk singularity is what we are trying to put together for organizations.
So that's your vision and strategy, and you're using the new technology, AI, really to pivot on your most recent recent move. Bring us up to speed. What is your growth rate? M&A, you acquired much earlier than I would have thought companies would do 5 or 7 years ago. I think your timing was perfect. What's the current run rate, and what's your next moves you're going to make?
John, we've been very fortunate. We started selling in April 2020. That's when we went live with our platform. For the last 3 years consistently, we've been growing in triple digits. As you know, we're Series B funded. We've raised over $100 million with a team of 165 people. Forrester recently came out with our space. It's a small space that we started with called cyber risk quantification. They placed us on the top right, which basically means that we are the number one platform in our space in the world on helping organizations around the world measure, manage, and mitigate their cyber risk.
You know, the fun thing is, when there are new technologies and new directions, it's usually not the incumbents who lead in that area. And we'll see if this is different this time with AI or not. It may or may not be, but you literally have moved from a very small company to the number one position in terms of the direction. Key transitions along the way. How did you make that transition, services to product? And then tell me about your journey from an end-to-end company to a US with 2 headquarters now.
Certainly. John, I started this company back when I was in my dorm room. I'm a computer science engineer by background. So
11 years ago?
Yes, 11 years ago.
I see a couple gray hairs there.
Yes.
And you've been
you
doing this for a while.
For a while now, John. And this is my only job.
Hair at
all. John, wisdom is where we are trying to get towards. But John, I started this company back when I was in college, and from there we were a services company. I personally, John, I define myself as a geek and a nerd. So yes. I love computer science and I love diving deep. And out there is where we started as a services company, where we were going ahead and helping some of the largest companies around the world doing their cybersecurity assessments. But this was totally manual in nature. This was totally driven. We actually used to hack these companies with their permissions, and the largest companies in the world were our customers already. But we did well, but then we figured out, John, and this was during the time when you invested into us in 2018, that services is great, but it's not exactly scalable. And,
or differentiable long-term, nor will get the multiples.
Exactly. Although, John, the unique thing I still remember when I spoke to you, and we were very fortunate because, John, you led our seed round. At that time, we had a couple of term sheets from a couple of VCs, and all VCs told me about the fact that, look, services is fine because everybody understands it's not scalable, and we need to shut that business down and we need to focus on the product, which I think, of course, is the right thing to do. But you were the only one, John, who said that we should definitely go to the product route, but services attached to the product, especially when you're selling to large enterprises, is going to be a key differentiation in the long run. And John, that actually has proven out to be very, very true today.
Customers in the end buy outcomes, not products.
Absolutely.
And you don't want it to be 50-50 services versus product and architecture, but 80-20 or 90-10. I think it's what some VCs miss in terms of the importance. When you talk about transitions, tell me about the journey from India to the US. This will be one of the companies we use because if you watch, India is the fastest growing startup environment in the world. And I think the US and India together are going to change a marketplace. So the ability for Indian companies to come to America and American companies to go to India as literally each other's number one and number two world headquarters is the future. How hard a journey was that?
John, I still remember when you invested into us, we were just starting to think about the product, and when we went live in April 2020, we literally had 0 US customers. From there, today we have a few hundred customers. 80% of them are American customers. And I remember even tiny things around strategizing on individual accounts. How do we get into that? John, a ton of ways of approaching that, a ton of your JC2 days and introductions obviously help in a very, very big way in terms of going ahead and adding to the credibility. Yes. Of a brand new brand which nobody has heard about, and at the same time a space which is also new. So we were dealing with a number of news. It was not just okay, we are an EDR company, we understand EDR, but you're a new brand. Yep. We are a new brand in a new category, and I understood very little about how the US market works. It looks like it's been we've been fortunate, we've been reasonably successful in doing the transition, and I can tell you very proudly that today, John, not only do we understand, but we're definitely the market leaders when it comes to our customer base, firmly established in the US market.
You know, the fun thing is you've been a great student of how to learn and scale and taught me a fair amount in the process. The numbers speak for themselves, over 80% growth, not including inorganic growth, including inorganic, 165% growth. Attracted $100 million in investments, not bad. And as an investor, I've been very fortunate to get a 10x return already. We'll see if this can be a 10x and then a 10x, and that's a big goal. But I really feel good where you are in the market. When you think about your penetration in the U.S. market, what did you do right, and what were some of the lessons learned for others? When you're a company that is primarily out of Asia, specifically India, you come to the U.S. Key takeaway for the group?
John, the big thing which I learned was that, especially when you move to the US and make the transition, thinking that sales can happen without actually being there with the customers, being there, going and seeing them, especially enterprise sales, because that's the only kind of sales that we've done and we've done reasonably well. I thought naively early on that it'll be fine to go ahead, just make the product, have some people here, and with a team of 1 or 2 people, you can actually go in, speak to the customers, and they get excited by a few customers, and then sales can happen that way. Very less did I appreciate the actual machine that goes around. The sales people that we actually hire are actually just the tip of the spear. It is actually a full machinery that supports it, whether it's with solution architects, channels, enablement, the whole marketing engine that goes around that, the recall value, all of that creates a big impact. I can give you some numbers, John. We just came out 8 days back by closing our Q3, which was the best quarter in the history of our company.
Congratulations.
And thank you, John. And out there, we were pleasantly surprised. We had more than 25% deals which actually came back to us, which we were speaking a year or 2 years back, and they said, look, right now we don't have the budget, priorities are not there, but now with the new SEC rule where people are asking for more data-backed decision making of how do you justify your budget, how do you go ahead and talk to senior leaders, we've seen people boomerang, rebound, and come back to us. Now that happened because of this engine that we built over the last 3 to 4 years, starting from market awareness till actually positioning ourselves, as you say, even reinventing and being contemporary with what is really required. We launched a new module around AI risk quantification, which is a pretty big requirement in a lot of companies today. So being relevant and at the same time going ahead and building that engine, John, I didn't have a big appreciation for that. And the last piece which I also learned was, John, the sales world is not just arts, it's actually also very heavily science. Of course, I'm an engineer, so I sometimes lean a little too heavily towards the engineering side of things, just a little more. But John, the predictability of how do you close a quarter, how do you go ahead and actually forecast numbers, that discipline, and that comes in with a lot of groundwork that you actually do in starting from putting the teams together, the processes together. We're a small company, we don't like processes, but having some kind of a framework.
Bureaucracy.
Exactly, John. We don't like that. We're a pretty flat organization.
Yes.
So, but at the same time, in order to go ahead and be predictable, it's that discipline is something that really comes in. I had very little appreciation for that, maybe half a decade back, but today, we've been hitting our numbers that we've been committing to our boards continuously quarter on quarter, and that really is something that I feel happens because of that, again, framework and the engine that we've been able to put together and go to market.
The fun thing is you've been able to maintain ambitious goals, but you never stretch yourself or your organization too far.
Yep.
So many startups set goals that they might hit for 1 or 2 years, but then you get addicted to trying to hit that number, then you do unnatural things to get there. That's why a lot of the unicorns of 2021 won't be unicorns in 2024 or 2025. You hit a whole bunch of elements. Let's kind of take them in segments. And I would have not recommended M&A activity for a company with less than 150 people, and yet right after you had a great quarter, you did our last fundraise. I think it was 1 week later, you said, John, I want to buy this company. It's a fairly large one in comparison. Tell me about that. What did you do well on the M&A? How's it worked out? And what would be your lessons for people listening to this?
John, if I take a step back, I think what I learned from you, John, is whatever we do, we need to be aiming to become the number one or number two player in the industry. I tell my team number one.
Yes,
because
I do too.
so that's really the goal, right?
Yeah.
Our market, when we started out, it was only this space called cyber risk quantification. And we came across this company that we knew extremely well. I would call them our number one peer in terms of actually having the market share, having that respect from a lot of customers also.
Primarily out of Europe, if I remember right, in terms of its focus, also US, is that correct?
Yes.
So you not only acquired a company, you acquired a company that had the majority of its players halfway around the world, and it wasn't in India.
Absolutely.
That was kind of high risk.
It was, John, and it was the first acquisition we've ever made. We've obviously heard a lot of horror stories, a lot of people scaring us, saying that most acquisitions fail.
Well, what they don't,
absolutely, and what they did not know is, John, again, I was very blessed to have somebody like you coaching me. I remember we're probably doing one call every day in terms of, just thinking through the strategy, thinking through the execution, thinking through the messaging, thinking through the press release, communication to internal stakeholders, customers, and then the broader market. And I can say this, John, that it started by having a very, very common shared vision between RiskLens that we acquired and us, of saying that the market needs a standard.
A great CEO, they want a solution, not a bunch of standalone products.
Absolutely, John. And that's where having that alignment with
Yes.
their CEO, with their leadership,
Yeah.
to say, look, we both have a common shared vision
Yes.
of how the market needs to shape. We had our own strengths because we were I've been a very engineering heavy CEO. As a leader, John, I'm product obsessed is what I keep saying, because
Yes.
it starts from the product, and then of course you need a great go-to-market motion, and then of course followed by great customer success. But the point I'm making there is that, John, that from an acquisition perspective, when I met their CEO, Nick, who's now he's really, really good, and I'm truly honored to have him as a partner running the company together now. And when we met, I would say, and I know this might sound slightly scary for especially my shareholders, but within the first 5 minutes, just the sheer alignment of how he saw the world and how I saw the world was startlingly surprising in a positive way.
Well, what's interesting is many people, I've done 180 acquisitions at Cisco, and then with my companies, we're all coming up on 25 acquisitions for our startups, is a lot of lessons learned. And you learn more by your mistakes, your missteps, etc. on it. But a lot of key takeaways. If it's not really strategic for you, don't do it, because they are very hard, the majority of fail. You don't pick a company with a different culture and values. And Saket, your emotional IQ is balancing with your just raw IQ, and listening for a while as a young CEO, all of us miss that at first. But if you really have the right M&A partner that you're acquiring, and make no mistake about it, you're acquiring them, it's your culture acquiring them, in 5 to 10 minutes that this is going to be a good fit or not. People look at me and say, John, you did billion-dollar acquisitions, first meeting with the CEO, and within 15 minutes you decide you're going to move on it. Isn't that kind of in high risk? You want to fill in the risk with a process behind it that makes it work, but you do know fairly quickly. You made a couple other moves that were really fascinating to me. When engineering got a little bit off kilter, you jumped in and ran engineering, and I was worried about the CEO getting too spread. The good news is you are an engineering geek by background. That's what you founded the company conceptual-wise. How did that work? What would you share with the audience in terms of key takeaways there? But I want to lead with, he was an engineer by background. So when you go in to fix something, don't think because you're really brilliant over here, it carries over to other segments of the business. That's what a lot of CEOs make the mistake of doing when they're on a roll. They think they're good in one area. Therefore, their gut can tell them what to do in others. That doesn't work.
And John, I think even when I jumped in as for leading engineering, I was very clear about the fact that the kind of people that we have, I don't know more than them when it comes to engineering. So I went in very, very consciously about the fact that because, John, when I analyzed for us and sustainably how can we keep growing at triple digits year over year, all of that boiled down to adding more value to our customers. And the value that we add to our customers comes from the product. Now, I'm not saying if you have a great product, you have a great company, but the foundation on which sales and customer success goes to the market and talks proudly and actually goes ahead and becomes champions and ambassadors, it is the value, and the value comes from the product. And that's the reason why, John, again, learning from you, I would say
we learned together.
Yeah, John, you're very kind to say that. But on those lines, John, the one big learnings that I've had is that you say that it's not just risky to not do the right thing, but also do the right thing for too long and not reinvent yourself.
Equally as risk. You disrupt or you get disrupted in this market very quickly with a strategy. You made another move, which often I'll say a positive and a area to improve on. Very often when a engineering-led CEO makes a decision on a salesperson, a sales leader, they pick somebody who talks like an engineer, who's really a business development person in disguise. Yeah. We had a couple false starts. Yes. But then you got it right on sales. Yeah. And you got somebody who was truly a sales leader, and it was fun going through that process with you. Then you took it a different step that even I would have hesitated about. I'm a huge believer you take the corporate strategy and vision, which the CEO has to own, have the passion in their heart they're going to do, and then you get each of the representatives to be able to, sales reps and support people and your own management team, but especially the sales reps, to be able to deliver that very effectively. Yeah. And especially as you make a pivot. You made your AI pivot, I'm going to come back to that in a minute, in 31 days. You moved from a non-AI player to a safe GPT player, number one in the cybersecurity industry in terms of that transition. So it speaks how quickly this market's going to move. But you also had each of your sales force required to give the presentation and to get on a 9 out of 10-point scale, a 9, or you said you would let them go. I said, Saket, that's a little bit risky for salespeople. They're emotional. How did that work?
The short answer is, John, it was very, very shocking for most of the team to have something like this. However, John, if we are innovating at a very, very fast pace on the product side, yes, and if we don't have our teams up to speed of what's really going on, it doesn't help anybody, because just having a great product doesn't mean you have a great company. Yes. And that is where, John, I think it started with first hiring great people, because I've been very, very focused on how do we get the best reps which are out there with our industry experience and coming with that track record of actually making things happen. Now, when you hire great sales reps, John, enablement, in my mind, doesn't start by saying you need to be enabled. It needs to start, and we started this by saying, how do we make you $1 million a year in commissions? Because that is something which every sales rep would like to do. For some reason, this magic number, John, $1 million a year is what every sales rep.
Well, it's 250, then it's 500K, then it's $1 million. It isn't that sales reps are money motivated. They've learned to measure, were they a good salesperson, by what percentage of goal they were. And almost all good sales reps make their quota the vast majority of the time, like 80 or 90% of the time, which is why it's important to set goals they can hit and exceed. But you really capture their attention. Yes. How many people did you have to let go who couldn't make the transition?
0, John. So
that was a takeaway, because I thought you were going to have breakage. Being willing to disrupt yourself, know what you know and not, go to the people that are advising you, say, here's what I'm thinking about doing, what are the trade-offs, need to watch, I want to do this, but let's minimize the risk on it. The transition to an AI company from a non-AI company, that's what every company out there is trying to do. And they spend a year studying it, and they say, I'm developing the strategy, and then they say, I'm implementing the strategy, and then they say, in the next 2 or 3 quarters, this included a lot of the big companies, well, here are the results of my strategy. And if you watch what Microsoft did and ServiceNow did in their last quarter, they announced, they were able to say, strategy and vision, here's what our implementation is, and then they showed the results. Yep. You did that in 1 month, 31 days. How? And what's the lesson for the people listening?
John, the bigger theme is obviously, as you say all the time, that either you disrupt or get disrupted. Yeah. And John, I've heard you say how AI will change the world, not just in the last 18 months, but for the last 7 years that I've been fortunate to know you. Yeah. And John, because of that, it's been ingrained into our systems to going ahead and understanding that if we don't become an AI company, we know we will cease to exist. And that's really the reason why, John, when we got
survival.
Absolutely.
It wasn't just you got to be differentiated, it's survival.
Absolutely, John. And that's the reason why when that idea was seeped deep into the muscle memory of our organization, and they knew that. And then thanks to GPT, we actually got a platform where we didn't have to reinvent the wheel. We didn't have to reinvent. We could actually plug into the APIs that is already available. And again, it goes back to the talent. We've been very fortunate, John. Almost 75 to 80% of our team would be AWS, Uber, Netflix, Spotify, so the top names. We've been very, very lucky. And when we got the right people, John.
That's when preparation meets opportunity, but that's a topic for another time.
Totally, John. And that's where it is. When you've got the right people, John, and you've got the right ingredients now ready that we can apply to our platform, we just married that together, and it was a pretty deadly combination where, the chairman of the Gartner Risk Summit conference last year, he actually, the only product that he showcased at the opening keynote of that conference was our product, because he says, in his words, we're the only cybersecurity vendor which actually could demonstrate a working use case with using OpenAI and GPT into the core product, which is everybody's talking about it by that time, but actually showing that was something very fascinating for him also, and that's the reason why we got a pretty good viewership and great success from that conference.
What's interesting is that speaks to speed of movement in this market. It also speaks to why there's going to be tremendous disruption, a lot of winners and losers. If you haven't got an AI strategy that the CEO believes in and that the team is focused on, you're already in question, are you going to survive, much less have any chance of leading. That's first true of a tech company, but it's now true of every company. When you look at security, it's an area that you and I are very passionate about. Cybersecurity, I think, after AI is the area. In fact, I actually have 9 cybersecurity companies, as you know, that I believe in the most. But spending on cybersecurity was flat this last year. And I personally believe that a lot of the money went to AI, but they were buying products from vendors in silos. And with the rules of the Security and Exchange Commission, which now require the board to be held accountable for what is your cybersecurity strategy, and when a attack occurs, you've got to disclose it within 4 days and position it, and that's hard, especially for public companies, on how you drive it through. I think this market's getting set up for consolidation and growth. So your numbers again, growth-wise, what are you projecting for this year? Remind you your shareholders are also listening.
Certainly, John. We aim to continue a triple-digit growth for the next 24 months with
triple-digit.
Triple-digit year over year.
So in a market that isn't growing, you're growing triple digits. It says there's the opportunity. That's another key takeaway. You disrupt during the tough times, not during the good times, and people tend to forget that. My favorite last question that I always enjoy asking is, and I ask myself as well regularly, what is it that you wish that you knew 12 years ago when you were founding this company, or lessons learned even 5 or 6 years ago that you now know that you could share with the audience?
John, get John Chambers as an early investor.
You're getting very good at sales and very nice at one of your key investors, but the mentorship is a key issue that I think all of us face, especially when it occurs rapidly. But you've got to get mentors who are also reinventing themselves. What else would you share?
I would say the big thing, John, that I learned over the last 12 years is thinking we can create a product without being close to customers. I think the big thing, John, that I have learned over the course of this time of building this company is going ahead and especially when you have a bunch of really smart people, we think we know the problem, we think we know the solution.
And you want to go tell the customer, here's your problem, here's your answer.
Exactly, John. So,
which is fake.
Totally. And then if the customer doesn't buy, and I've made this mistake a million times, they're like, they don't get it.
Yeah.
But the reality was I didn't get it because I didn't have the customer involved in the actual structuring or the architecture of how we are building the product, the values we'll deliver, the ease of access, all of that comes into the picture. So I would say, John, that's been my big learning, that how can you actually work with the customer? And again, now that I see a lot of startup entrepreneurs making this mistake all the time, where again we fall into that trap of thinking that we know the problem and the solution, but just going and talking to a lot of customers, that itself changes the perspective. And that's the reason why, John, there's so many companies which started off differently but had to pivot all throughout like in history, right? Instagram was a whiskey tasting app, and Uber was never meant for normal rides to be
and
shared.
Amazon was selling books, not computer
online.
solutions. Yeah.
Totally. So that's the big learning that I would say, John, if I were to go back, I would say start, and it doesn't need to be a very long list of customers.
Yes.
It can just be 3 customers, but making them exceptionally happy before you think about scaling to 30 and 300 and 3,000 customers. That's the big learning that I would say that I would give myself if I were to go back a decade.
It's interesting. So many lessons learned today. If the audience comes away with 1 or 2 things you do differently, Saket, you and I have accomplished our goals. We'll start with the JC2 portfolio first, the 20 companies, then we'll take it in the market as a whole. A lot of lessons learned. Also, the takeaway at the end, I think, might have been the most important of all. So many companies think they have the solution to the problem, and yet the problem they're solving is morphing at tremendous speed. So even if they are right on starting with AI, the problem is now going 180 degrees in 6 months, you have to listen to customers what you need to do. I'm fanatical on that, and I think every acquisition I ever did at Cisco, I could tell you the customers that said this is important to you versus tactical in terms of the direction. Saket, so many lessons learned, including why you're very kind about a mentor and me sharing with you ideas. I learned from you as we move. And I really believe in this company. I believe in your leadership. You're lighting the world on fire. You're growing under control most of the time. And I think sharing that with your employees and the vision and having the courage to change is just awesome. So I look forward to doing this 2 years from now and sharing with the audience what's been our progress. Saket,
I look forward to this, John. Thank
well
you
done.
so much.
Thank you.